Ishika?
Namaste and greetings. I, Ishika Chaudhary, researcher at IMPRI, Impact and Policy Research Institute, Prabhav एवं नीति अनुसंधान संस्थान, नई दिल्ली, extend my warmest welcome to you all to IMPRI #Web Policy Talk. Today, we have gathered for a special lecture on the topic, the housing market amidst the COVID-19 pandemic by Prashant Thakur. This is part of the series, The State of Cities, #City Conversations, organized by IMPRI, Center for Habitat, Urban and Regional Studies. The chair for the session is Dr. Rumi Aijaz, Senior Fellow, Observer Researcher Foundation, New Delhi. We welcome you, sir. Now, with the permission of the chair, I would like to introduce the speaker and discussants.
Please introduce. Thank you.
Prashant Thakur is Senior Director and Head of Research, ANAROCK, Mumbai. He has worked for consulting majors like Deloitte and Ernst & Young before venturing into the startup ecosystem. He was instrumental in setting up the research and data operation verticals from scratch at companies like PropQT, CommonFlow.com, and QuickHomes.com. His areas of expertise include setting up business verticals in the field of business research, market intelligence, and strategic advisory. He is an avid learner and is currently pursuing a doctorate along with his professional commitments. Based on his contribution towards the research and advisory work in the field of Indian real estate, he was acknowledged as the thought leader of the year 2018 by International Brand Equity. We welcome you, sir.
Thank you, ma'am.
As discussants, we have Dr. Akshaya Kumar Sen, Joint General Manager, Economics and Fellow at Human Settlement Management Institute, Housing and Urban Development Corporation Limited, New Delhi. We welcome you. And Pavan Dixit, Co-founder, Property 360 Degree, Hubli, Karnataka. We welcome you, sir. We look forward to learning from our distinguished gathering. Now I hand over the proceedings to Rumi, sir. Thank you.
Thank you, Ishika, for the good introduction. I join you and IMPRI in welcoming today's distinguished speaker, Mr. Prashant Thakur, discussants, Dr. Akshaya Kumar Sen, and Mr. Pavan Dixit. It's a pleasure to host, to be a part of this enlightening program. The housing sector does not need an introduction. Its significance is very well understood. It is among the, I think, the most important sectors in the country, which offers employment opportunities to a large proportion of the country's population. People with different backgrounds, they may be skilled, they may be educated, they may be illiterate, living in rural parts of the country. All of them have been able to find scope for contributing towards the growth and development of India's housing sector. The housing sector is also important because it offers opportunities to various stakeholders, especially to architects, to experiment with innovative designs and ideas that they learn through various experiences and through their education and through overseas visits. So they get a chance and opportunity to experiment and to bring in new practices in the housing sector, which is very much needed. And the third important aspect of the housing sector is that there is a huge housing need in the country. There are people from different social and economic backgrounds living in different parts of the country who are in dire need of good housing and supporting facilities. So insofar I understand, this sector is a very important sector, and it's a good occasion for IMPRI to organize a talk by a person who understands this sector very well, and will bring in rich experience of the experiences he has been having over the years. The second point that I would like to place before I invite the distinguished speaker is about the growing housing need in the country. Although government programs have been announced and launched, and many schemes have been launched from time to time, there still exists a large shortage of housing in the country, irrespective of the social and economic condition the person may be living in. Very recently, we learned about our Honorable Prime Minister announcing a package or launched a program for awarding houses to over 1 lakh persons in the country. So there still is a lot of scope for growth, progress, and development of the housing sector in the country. And for all of these reasons that I just mentioned, the need for efficient functioning of this sector is very important. Unfortunately, in our country and in other parts of the world, this is not limited to the Indian conditions, but even outside, disruptions have occurred from time to time. And these disruptions we have witnessed these come in various forms. Sometimes it's the issue of finance. Sometimes it's the issue of affordability by the person who is interested in renting or buying a house of his or her own. Sometimes it's about the commitments made by builders about giving house possessions to the families who have invested large amounts of money. Sometimes it's about violation of rules and regulations by the builders themselves due to a variety of reasons. On other occasions, there are unfortunate incidents such as, and this is particularly observed in the case of National Capital Region and other large cities of the country, where air quality is deteriorating by the day. Now, if you look at we all know, I need not say that the WHO releases from time to time their rankings of the quality of air in different cities of the world. And unfortunately, Indian cities, as many as 13 to 14 to 15 Indian cities, have always fared among the topmost polluted cities in the world. So the disruption in this context is about the quality of air in and around large cities. If you look at Delhi, the Environment Pollution and Control Authority has come out with GRAP, the Graded Response Action Plan. And when air quality deteriorates around the Delhi region beyond a certain air quality index level, all the building and construction and other activities come to a standstill because of the poor air quality. But of late, and the most recent and significant one, which is also the discussion of today's topic, is about the pandemic which still exists in the country and beyond, and it is still persistent and prevalent in many parts of the country. I'm sure this has had many adverse consequences on the housing sector in terms of its progress, its growth, number of units constructed, the persons who have been employed in this sector. So in the light of this background, I would like to invite today's distinguished speaker, Mr. Prashant Thakur, to enlighten us, to familiarize us with his experiences of the housing market as it exists in current times. And we look forward to hearing your views. Over to Mr. Prashant Thakur.
Thank you, Dr. Rumi. It's a privilege to be part of such distinguished panel members, and yeah, I think you have set the context quite well. That real estate, especially residential real estate, is one of the most important sector for our country, as it has a lot of ancillary impact on other industries. And as I've been saying in my previous talks also at various occasions, that 80% of India still needs to be built, and we have inherent demand for housing. So in this context, pandemic has kind of changed a lot for how this sector would operate in future. And also there has been a lot of disruption in terms of regulatory changes that has kind of brought sea change in this sector, how it operates. So I have put together a small presentation which tracks the evolution of industry and what has been the impact. So with your permission, I would like to share the presentation with our participants.
Certainly, look forward.
So is the screen available, Dr. Rumi?
This is perfectly fine. You can switch it to the slide mode.
Yeah. So as you rightly said, that real estate has a huge multiplier effect on the entire Indian economy, and it's expected to grow to 100 billion in terms of overall market size by 2030. And currently it contributes around 6 to 7% of the GDP, and by 2025 it is expected to go by 13%. And it has impact. It has a correlation with various industries. I would say 250 ancillary industries in terms of cement, steel, other allied industry that caters to this real estate. And if you look at the term of employment opportunity it generates, I think after agriculture, residential real estate, or I'll say construction sector as a whole, is the second largest employer. So in a nutshell, this sector is crucial for the India's ambition to become a 5 trillion economy by 2025. Unfortunately, pandemic impacted this sector quite severely. But the good part is that because of the inherent demand that we have for housing, this sector is slowly coming out of the jolt that it received from pandemic. How do we stack when we talk about various countries? So what I've done is I've compared India with China, United States, and UK, and also included Brazil. So China and Brazil would be the closest comparison that we have for India in terms of how we evolve in real estate. So if you look at urbanization rate, I'll just pick up the key parameters. So urbanization rate, if you look at all other countries, including Brazil also, which is in terms of housing development, this is the closest match along with China for India. We have one of the lowest of urbanization rate. And if you talk about urban housing shortage, as we speak, we stand at 11.2 million just in urban India. This is the shortage. And if you talk about home ownership as a percentage of urban population, it is just 32. While you look at other countries, it's kind of quite significant. So this basically the reason I wanted to highlight these numbers to kind of support the fact that India has inherent demand for housing. Historically, the fundamentals of the industry, how it operated was kind of not very conducive, and that led to the sector getting into trouble. I'll speak for the kind of changes that have come in my subsequent slide. But to just to continue with highlighting the importance and why I feel that residential sector, housing sector, has a great future ahead, because if you look at mortgage penetration, it is very low. If just 10% of the entire GDP as compared to 20% of China, and in UK it's as high as 88%. We have large families compared to other countries, and with this nuclear family gaining prominence, the possibility of people moving out to the urban centers and then kind of buying a home increases a lot. We have a very young population as compared to US and China. Our average age of Indian citizen is just 29 years. Good part is 54% of the population comprises of working class. And another factor that post pandemic what we'll see is that the demand for bigger houses will increase because of other norms. People would need that extra space because a lot of activities will be now performed from home, like work from home, school from home, other aspects. Because we still have very small houses if we compare with our global peers. Now, again, coming back to the point, important for the entire economy, why did it get into trouble? We all would recount the days, especially if since most of you are based off Delhi NCR, illegal construction projects being launched just on papers, home buyers waiting for their possession, never getting that, funds being diverted. For example, the projects, the money that was collected from one project was diverted to just launch another project on the paper, and the developers kept on rolling the money, and then the actual execution never started. Scams and scandals, ED questioning the promoters became the norm of this industry, and that's where the buyers started to retreat because their hard-earned money got stuck. So I would rather say, if we look at the era before real estate regulatory authority came into picture, era, I would say the market was primarily driven by investors and speculators. That's where the market went into the zone where problems started to emerge. Because any market which is driven by speculators is not good for long term. Now, why this sector was in bad light? If we look at the time period before RERA came into picture, this industry, real estate sector, residential real estate sector had a very low entry barrier. Anybody who was a landlord with good political connection could become a real estate broker or developer. It was highly fragmented. Organized developers restricted themselves only to few select market because the hassles of getting approvals and then running through the various channels of government agencies and corruption prevalent in the authorities were so rampant that most of the organized players limited themselves to few pockets rather than having a pan-India presence. There was lack of financial discipline, as I highlighted that the funds were kind of being diverted. There was no accountability, and also RERA was not there. So things started. This sector, then government realized that this sector is so important, and basically it kind of runs from the borrowed money from end users. This was the right time when government stepped in the year 2016 and thought of introducing some kind of discipline in the sector by bringing in RERA. So this slide basically captures the residential real estate from 2013, and we have tried to forecast till 2023. So, if you look at this slide, it has been broken down into 4 broad categories, which I call fearless, regulated, controlled plus outlier, and cautious revival. So from period of 2013 to 14, close to 10 lakhs units were launched. It was the era when any landlord with good political connection were launching projects just on papers. And then since it was driven by speculators, we saw a huge rise in the prices, and that's where price bubble started to pop up. And then we were facing the problem of unsold inventory rising, a lot of stuck projects, project delay. The period of 2015 to 17, I would say slowly regulations started to coming in. This was the time period where RERA demonetization, GST, IBC came into the picture. And that's the reason you'll see the supply from 10.10 lakhs came down to 7.9 lakhs. So there was some kind of discipline being brought in because RERA now enforced a developer to get all the approvals from the agencies, getting a RERA approval certificate, and then only launch the project. And then demonetization and GST brought in kind of a lot of discipline, and a lot of black money was eliminated. So that's why you see 2017, it kind of saw a huge dip. Then the period between 2000 to 20, you would see that, I've mentioned it was a liquidity crisis when ILFS crisis came into the picture, and we had COVID-19. So 2020, I would say, was the time when this industry reached its bottom. Because before COVID, what we were thinking that 2019 would be the bottom because all the regulatory changes were now behind us. Liquidity crisis of ILFS was also settling, but COVID-19 happened. So the forecast period, if you see 21 to 23, though it is kind of recovering, but it's not going to reach the peak of 2014. That clearly means that the developers have learned the lessons quite well, because this period of growth is now being driven by corporate developers. We have seen a lot of consolidation that has happened during the period of 2018 to 2020 and 21 half, because all those weaker players could not sustain in the pressure of the regulatory environment, which is quite stringent, and also the funding environment has become very stringent. The banks and other private equity players now are doing their due diligence. Their underwriting standard has gone quite high, and only good developers with track record of delivery and corporate governance are able to secure fund. For other C and D category developers, the cost of fund has gone so high that for them it was only an option of either folding up their business or consolidating with a bigger player. So this is the slide which would bring out the picture of consolidation. So if you look at the year FY17, 83% of the market was dominated by local and unorganized players. The 17% of the market was controlled by large developers, graded developers, I would call, and listed developers. So 6% was the share of listed developers, and 11% was the share of grade A good developers, not necessarily listed. Now look at where we are at Q1 FY 2022. So the share of unorganized developers has gone down from 83 to 69%. And while the 17% share has gone up by 31% to 31%, if we talk about the organized player. And the way consolidation is happening, I think by the time we see the end of pandemic, and we reach 2025, I think this 31 would grow to 50%, which is healthy for this industry, because then a lot of corporate governance, a lot of discipline would come into this sector, which is the need of the hour, because the real problem of this sector has historically been lack of any corporate governance and accountability. So this basically shows how we went down. The purple bar shows the new launches that happens on a quarter-on-quarter basis, and the red bar shows absorption, basically sales. So if you look at this data, I have divided this slide between pre-COVID and post-COVID. Anyways, before the COVID had struck us, the industry was kind of, it was in a slowdown mode. COVID-19 only accelerated the process of consolidation and weeding out bigger players. And what we have seen to our surprise, that post-pandemic, people have realized the importance of house. And now at the historically low interest rate, home loan rate, and the prices also have not gone up by hardly 1 or 2% in the last 5 to 6 years. The affordability has improved, and that's where people have started to come out and make the purchase. I would say rather pent-up demand, and that's where we see a sharp recovery from the first wave to Q1 2021, before the second wave hit. And what we have seen in Q3 21 calendar year, a very steady improvement in both absorption and launches. So that, I think supports the hypothesis that India has inherent demand of housing, provided the houses come at a right cost from a right developer, and a right configuration. So people at this time are looking at value buying. This market, unlike the past, is not driven by speculators. It is driven by end users. So in my opinion, I think this is the right time for any end user to make the purchase, because most of the properties are either nearing possession or being developed by grade A developers. So, I thought of highlight which of the cities, or let's say what are the mix of affordability in terms of launches the projects are coming in. Now, if you look at this slide, what does this slide say? The green, the 44, the bottom segment of the bar that you see represents the affordable projects that are being launched as a percentage of new launch every quarter. So after the government introduced Pradhan Mantri Awas Yojana and various incentives for affordable housing project, the share of affordable housing as a percentage of total new launches every quarter went up to 44% as on Q1 2019. But if you look at Q3 21 and if you look at Q4 2020, when this pandemic was at peak, the share of affordable housing has started to come down. And the reason is quite clear, that we would all agree that this pandemic has hit the bottom of the pyramid, the low income group, quite severely. The SMEs and MMSE sectors have been hit quite high. The unorganized sector is still grappling with the impact of COVID-19. They're trying to get on their feet. And this was the segment, I would rather say, was the target audience for buying the affordable housing. This is also one part that you see the dip. And also what has happened, the banks are very reluctant now to lend to these borrowers who come from unorganized sector, because lack of documentation and because of lack of steady income stream. So that's where affordable is kind of getting into a turbulent zone, I would say. But the good part is the budget segment, 80 lakhs to 1.5 CR, has seen some kind of increase. This again supports the hypothesis that post COVID-19, people are now preferring bigger houses, larger houses. In terms of, people who are looking for 2 BHK are now looking for 2.5 BHK, 3.5 BHK kind of stuff, so that they can have that extra space for either, work from home or kind of, work from, or let's say school from home kind of concept. One more change that we have seen post the outbreak of COVID-19, that the peripheral areas are gaining prominence. So most of the launches that we have seen post COVID-19 by the developers, new launches, are happening in the peripheries. Because again, the underlying factors that are playing out is that with this hybrid working model, people can now stay further away from their workplaces. Not necessarily that they cramp up themselves in smaller houses which is near the workplace and at a higher rental or capital value. They are now free to kind of look at the peripheries of the cities where rentals are quite cheap, or let's say the capital value of the houses are also quite cheap. And also with the connectivity improving, if you'd see from last 5 to 6 years, all major cities were undergoing through a lot of infrastructure upgrade. And in another 5 to 6 years, most of these infrastructure upgrades will get completed, and the peripheries will be well connected. And that's where developers are sensing this trend and also sensing the buyer's preference and launching a lot of the projects in the peripheries where land parcel is cheap, which helps them to launch projects in a budget and affordable segment. Another interesting phenomena that we saw during this pandemic was that before the pandemic, to keep the ticket size of the apartment under check, the developers were reducing the unit size. So from Q2 2019, you would see from 1030 square feet, it came down to 960 as of Q4 2019. And now it has gone up by 26% as of today. It has gone up to 1210. So again, it underlines the fact that now people are looking at slightly bigger houses, because now the health, hygiene, and that safe space is paramount for everybody. And this also underlines the trend that most of the buyers are now looking at this hybrid working model as a long-term option, and that's why they are willing to shift in the outskirts and buying a bigger homes. This recovery, many people have been asking me, is it sustainable? How is it different from other recoveries that we saw after global financial crisis? The difference is that this time the developers have been very judicious in increasing the price. They're not increasing the price randomly. They're just trying to pass on the input cost that has gone up. While in post 2008, when the recovery started, each and every developer in each city, they randomly increased the price, which again led to the price bubble and buyers kind of retreating. So if you see from Q3 2015, a price index of 100, there has been, hardly any increase. All the increase that you see is in the range of, 2 to 3%, except few cities where, from 15 we'll see a 10% increase. So prices have also remained range bound. The good part is that developers are also now kind of, as I said earlier, that they're more of a corporate developers now. They're not randomly increasing the price. What are the emerging trends that we have noted post-pandemic? Since we at ANAROCK, we interact with a lot of home buyers and take their inputs and preferences. So because during this pandemic, they've realized that this extra space is required. And few of the clients that we spoke, they said that they have old parents and they needed overnight staffs, maids who could stay, because the societies are not allowing them to go, these maids to travel frequently. The demand for plotted development has gone up. This is a win-win situation for both the developers as well as the homeowners. For developers, it's a quick cash flow, and for buyers, they can kind of build the house as per their preference. Post COVID, not everybody is now comfortable in living in a cramped space. And this pandemic, we also realized that the top of the pyramid, as I said, that the bottom of the pyramid was the worst hit. I would say that this COVID-19 situation has made rich more richer. If you look at how the stock market has created wealth for them, and that's where we noticed rise in demand for weekend homes and farmhouses. In fact, during Q3 2020 calendar year, 20% of the flats and apartment, or let's say the sales that happened in Delhi NCR, was in the form of farmhouses. So you will well imagine that how these rich people have made a lot of money from the stock market and is being now diverted into real estate. Township demands are on rise. Self-sustainable township, where in case of lockdown, people have realized that a self-sustainable township is much required. Luxury project has garnered good interest. Again, this is, I would say, a misplaced priority, because unfortunately what happened is that the stamp duty cut in Mumbai actually encouraged the rich people to go and buy ultra luxury projects where the stamp duty saving was quite high. So, but overall, it increased or I would say it helped the cash flow of the developers, which eventually will benefit this sector, because they'll be able to bring down their debt and kind of divert those money and coming up with more budget and affordable segments. So anything that is being cleared in terms of unsold inventory is good for the sector. Mid to high segment, it's an end user driven market, unlike the earlier peak that we saw where it was driven by investors and speculators. Surprisingly, millennials are looking to buy home, and that too, it's the reason I say it's surprising, because this was the generation which believed in renting versus buying. But post pandemic, we have seen a huge change in the kind of preference. Maybe the affordability is quite good, and they just want to secure a roof overhead at the early stage of the career, so that they are they get rid of these kind of liability and can have a debt-free life ahead. This is what this is a survey that we conducted during the first wave as well as second wave. Just 2 slides I would like to quickly summarize our finding. What we have seen, if you see during the first wave, 48% of people, they said that they preferred real estate, which has gone up by 54% during the second wave. So clearly the importance of house, everybody has realized, and kind of, people are kind of willing to purchase during this pandemic. Now, 47% of property seekers are looking for nearing completion. So, as I said, that most of the buyers are end user buyers. So these end user buyers would tend to avoid execution risk, and that's where they are preferring properties which are nearing completion or ready to move in. 71% of the respondents whom we surveyed said they want to buy it for self-use. So again, supports the underlying fact that it's an end user driven market. Now, what are the key things that the buyers are focusing when they look at developers? So 77% of the respondents said that they're looking at the developer's credibility. 56% said location. 81% said pricing. 68% design, and 55% said reliable post-sale services. So these are all attributes of a person who is looking to buy a house for his end use, a person who comes from a mid-income group. So that's where the core demand, that's where the core need of housing lies. And I think the market is slowly aligning towards that, both in terms of demand as well as supply. What is encouraging them to buy the property at this time? So 34% said that they want to buy because it provides them a sense of security, while 31% of the respondents said that they would like to buy because right now they feel that there are a lot of attractive deals. So again, the pricing environment, affordability is in the favor of the buyers right now, and the rising preference for property price is in the range of 90 lakhs, 90 to 1.5 sales. So that's why typically a salaried guy would buy. The suburban, I've already highlighted that most of the launches are shifting towards the periphery. 46% of the property buyers now prefer 2 BHK units. And as I said that, I've been saying that digital adoption in the real estate sector was very low. This pandemic has accelerated the adoption of digital for this industry, which was very traditional. And that's why now most of the respondents who we spoke, they said 60% of the entire buying process conducted online compared to 39% before pandemic era. So it's almost doubling of it. Now, what are the 4 key attributes that a buyer looks when he's surfing online for a property? Again, 64% looks for discount, 57% are looking for actual site image, 54% for accurate project details. So in a nutshell, the developers are now looking at a new set of buyers who has evolved along with the regulatory environment coming in. So the reason I say that this sector is now slowly being dominated by end user and the prospect is quite strong, because both the demand and supply side are now slowly aligning. Having said that, there are a lot of legacy projects which are stuck. I think that needs to be written off before we look at a very promising start. And I would say that we are entering, we are at a cusp of a long-term upward cycle for residential real estate. So with this, I would conclude my session. Over to you, Dr. Rumi. I hope I did not exceed my allotted time. Over to you, sir.
No, I think that was excellent. It was a wonderful presentation. It helps us to understand the changing trends and patterns in the real estate sector. It seems that the market is better in a better place now. And it is good news for the buyers. And if it's good news for the buyers, it is good news for the people who are working in the real estate sector, because the demand is high. And it's, you say from your presentation and experience that things are picking up. There are more regulations, but it has also helped in building credibility of institutions. So all of these are positive aspects. Everybody who's interested in purchasing a house or renting a property. Now with the real rental act also that has been launched, people would want to enter into safe transactions. So these are all positive things for the community. My second observation on your presentation is about the changing requirements of the population. You mentioned about preference for plotted housing, for larger sized rooms, and for townships and farmhouses. This is definitely the role of COVID pandemic has had a hand here. And if that is what people are looking for, it is good that the real estate sector is thinking of some such workable propositions which will help the buyer in meeting what they are looking for. Just for your interest, and you did mention in your presentation about more development occurring in the peri-urban areas. We in Delhi also, I am personally study the master plan for Delhi, and within that, one can notice a lot of proposals on greenfield development. They are identifying with the help of land pooling exercises, they are identifying new areas, new land in the peripheral areas where land is available, and they are getting into agreements with the farming community, whosoever is interested, to pool their lands in which greenfield development would occur. And if you are familiar with NCR, you did cover in your presentation. I would say, and I would agree with your conclusions and findings, that the peri-urban areas are the new areas or the new growth centers, I would say. Most of the construction activities is occurring in the peri-urban areas of the National Capital Territory of Delhi. So these are my impressions on your presentation. For further inputs or thoughts, I would like to invite our first discussant. But before that, I would like to mention that if any participant who has a question or a comment to make, please let the organizer know and we will take it up. With these, I would like to invite Dr. Akshaya K. Sen. Dr. Sen is Joint General Manager and Fellow at the Human Settlement Management Institute of HUDCO. Over to you, Dr. Sen. Dr. Sen, are you able to
Am
hear
I
us?
audible?
You are.
Yes.
Welcome.
Yes, I'm able to hear you, sir.
Welcome to the program. Look forward to hearing you. Maybe the video and audio of Dr. Sen is not working together.
Now, I think Akshay sir.
If Dr. Akshay
Yes,
Sen, it is much better now. We can hear you clearly.
Yeah, I've actually let me kind of switch off my video so that I think my voice will be a little clear.
Yes, it is now.
Yeah, so I think my video is off, or because I'm not able to see myself. Yeah,
It's off, sir, for now.
Okay, actually I'm sitting on the 6th floor next to the CBI building, so maybe some jammer issues or something like that. Very unstable, and now I think it is so. So I'm sorry for that. But whenever you won't able to hear me, then please let me know.
Sure, certainly.
Yeah. So thank you, Dr. Rumi. Excellent opening remarks. So let me congratulate and compliment Mr. Thakur, Prashant Thakur, for your excellent presentation and giving us an overview of housing market scenario in the present era, which I completely agree with. Is it, I'm audible, right?
You are, sir, you are. Please go ahead.
Am I audible?
You are. We can hear you.
I think sir is speaking. But,
Yeah, seems to be some problem with his connectivity. He may like to log out and log in again. Would that work?
then we can go with the second speaker.
Yes.
Yeah.
Or alternately, I will take him over the phone. No issues. So meanwhile,
Okay.
Pavan, I will coordinate.
Okay. So, Mr. Pavan Dixit, are you with us? Are you able to hear us?
Yes, sir. I'm able to hear you.
Okay. So let me just introduce you once again. We have Mr. Pavan Dixit, who is co-founder at Property 360 Degrees. This is based in Hubli in Karnataka. Mr. Dixit, you just heard Mr. Thakur's presentation on the housing market, and we look forward to hearing your views on the contents of the presentation, or if you have had similar experience in your area of work. Thank you.
Thanks for having me here, and it was great to hear Mr. Prashant Thakur's views, especially, I mean, the numbers coming from a research background people are, and especially from company like ANAROCK, are definitely a lot of takeaways from this presentation. Definitely what we have seen in southern areas, as well as the consolidation of real estate builders. There have been, so if I want to just give an example of tier 2 cities, so Hubli is a tier 2 city, and we used to have a lot of real estate developers who didn't have any credible background, and they were real estate developer just for the reason that they had not piece of land, big piece of land, and they had a lot of money lying around. But because of the compliance and all these things coming in, there is definitely, they have moved out, and they are looking for other. The other outcome that Mr. Prashant mentioned is very much true, that because of the black money have been kicked out because of the various reforms that have happened. Definitely all these factors. And I'm not sure about the prices. So prices where it says about 1 to 2%, and definitely there's not significant increase for sure. What we see is at least the prices remaining at the same level. Many people were expecting the prices will drop, and prices will drop, and there will be some correction in the market. So as such, I think there has been some stability, or there have been a minor drop in the pricing that we have seen. So all these factors, various factors Mr. Prashant have covered, are significant factors that are contributing towards the rental market that we are really focused on. Okay, as part of the rental market, when we look at one of the important factors Mr. Prashant said is the sizes of the properties are increasing because of the work from home options, because of the homeschooling. My question would be to him is, although we are among the top, bottommost when it comes to rental yield, how do we see the rental yield getting better over the period of time? Because here the property sizes are increasing. That's why the cost would definitely increase. Will that also, are they seeing any trends in increase in rent for comparatively bigger size properties in maybe top cities, top 10 cities or top 8 cities that we talk about? Definitely in tier 2 cities where we have been doing a lot of groundwork, we see that definitely rentals have come down significantly. So 20 to 30% reduction in rental value. So what this comes down to is the other point Dr. Rumi mentioned, that the Model Tenancy Act, which is trying to contribute to the structuring the rental market, the the property management as a concept where their sustainability depends on the rental yield that they generate for the investors. So all these factors are not falling in good equation when we look at the rental market and the middleman playing a more structured property management, trying to bring in the structured scenario for rental sector. So yeah, so those are the questions I think which are quite open to see how they will pan out in next couple of years. As Mr. Prashant said, that until 2023, we would potentially may not see a pre-pandemic or 2014 kind of scenario. And if at all we get back to that scenario, would like to understand his thoughts on where would he see the rental yield getting to, and how the rental structured rental market is going to play a role in urbanization. Yeah, those are my thoughts and few questions. Thanks.
Rumi sir, please unmute yourself. And yes, Akshay sir is back with phone. I think, sir, it's working now. Akshay sir, yeah.
Yeah, my phone is working, so I will use my phone. I think I'm audible now.
You are audible, very much,
Yeah,
much better.
Yeah, should I go ahead, sir?
Please do, please.
Yeah, so for the kind of sake of the mobile battery, so let me switch off my videos. I think it won't be problem for you, right?
No, it is fine. We can simply hear you.
Thank you. So, so let me first compliment Mr. Prashant Thakur for his excellent presentation. In fact, we are very happy to know that the housing market is going really, well, considering the COVID pandemic. So the second wave, the first and second wave. And the things which he presented, I completely agree with him. So ANAROCK is one of the property firms which we look up to give us the feedback from the government side as well. So I'm happy to know that, yeah, so your analysis has given us a very bright, promising future outlook, which is a good news. As we all know, and you all have also indicated that if India has to achieve this 5 trillion USD economy by 2025, housing has to work, and it has to work in a big way. Because you all have indicated that it has a strong multiplier effects. So what you have not informed, I'm just informing that as per the recent, the latest NCAR study, that housing has a very strong housing sector, not the construction sector. It's particularly the residential construction, which is the housing sector. It's a very strong multiplier. So, for example, if you invest 1 lakh rupees in the housing sector, through its direct, indirect, and induced effects, it will create 4 jobs, more than 4, and 97% of these 4 jobs are for the informal sector, which Dr. Rumi also mentioned is very important for the unskilled informal sector workers to be engaged with. And also the NCAR study says that it has the investment in the housing sector has the output multiplier of something around 5, which means that if you invest 1 unit in the housing sector, it will give you a cumulative revenue of 5. And similarly, housing has the income multiplier of almost 3, which says that if you if a final increase in the final expenditure in the housing sector would generate additional income as high as 3 times of the income generated within the housing sector itself. So that is why it is very important that we kind of sustain or maybe accelerate our investment in the housing sector, which is the focus of the government of India right now. You know, I also quote one of the studies recently undertaken by the National Institute of Public Finance and Policy for the impact of the PMAY, which says that it would by now it would have created all the investment of something around 86 lakhs houses already grounded, would have created something around 25 millions of employment in the economy. But if in a recent paper, I have applied the NCAR method into the PMOI investment, and it's a very nice thing came out, which says that by now, by September, when 86 lakhs houses have been grounded, if you use this multipliers which I just mentioned, so it would have given, it would have created employment to the extent of something around 7.5 crores in the economy, all through the direct, indirect, and induced effects. And by the end of the program, where we are aiming to construct something around 11.3 million houses, it would have, in fact create employment, total employment of something around 30 crores, and 97% of that for the informal sector, which is very important for a country like us. You know, similarly, as per my calculations, so with the 7.4 lakh crores total investment of 11.3 million houses, it would add something around 37.8 lakh crores to the GDP of the country. So that shows how it is important to increase the investment in our economy, you know, for the welfare of the population, as well as improving overall economic growth of the nation. So housing not only provides roof over the head, but also other things, as I mentioned. So coming to the other presentations, I like the way Prashant presented about the issues or challenges. You know, so if through all those nice presentations, but if I kind of broadly kind of recompose what he said, something around the problems relating to the land. You know, so like availability of a development land at the appropriate locations with a clear title, land titles, is very important, and which is not lacking presently in our country. But with the digitalization and also obviously it will improve, you know, the title deeds and all. And the second set of problems, or you can say challenges for affordable housing, is the governance related. You know, there are too many approvals, clearances, delays, corruptions, lack of clarity, all are hindering the development of the housing market. You know, so we obviously the government has already taken steps. You know, he mentioned about RERA. You know, RERA came in 2016, but you know, RERA already started to do the rounds something around 2010. You know, I was involved in initial drafting of the RERA Act, and in 2010 we started the work. So it took 6 years, you know, to reach the final thing on the behalf of the.
Akshay sir, you have gone on mute by mistake, I guess. Akshay sir,
Am I audible now?
now audible. Yeah, must be some phone or something. Please go ahead, sir.
Am I audible?
Yes, sir.
Yeah, there was some phone came, so yeah.
Yes.
Yeah, so the third set of issues relating to the availability of access to affordable housing finance. So there is it's kind of a skewed flow of funds to the housing sector. So if you see the reports of RBI and the National Housing Bank, you will see that the funds available to the economically weaker sections or lower income groups is only less than 4%, whereas the shortage is 95%. So, and all remaining 96% funds are available to those segments, MIG and HIG, where the housing shortage is only less than 4%. So this is kind of a skewed flow of funds to the housing sector, particularly in the urban housing. So that is why we need to have the accessible and affordable housing finance. So Mr. Thakur has rightly pointed out, banks are risk averse, so they don't lend to the poor because of their credit history and also. So so that is why government has already taken steps to set up the affordable housing funds, national housing funds, and other like credit risk guarantee fund trust, which has already been in operation, but in a smaller scale. So, and we also need to promote other financing instruments like the micro housing finance and other options. And the fourth set of issues is the construction related. He has already mentioned the problems is related to the constructions, like the credibility of the developers and then the availability of the technology, all kind of things. Apart from these four, as Mr. Dr. Rumi and also Mr. Pavan has already mentioned about this rental thing, so the rental legislation. So rental housing is an affordable option, but there is a lack of affordable rental market directly related, directly affects the livability in the city, particularly for the migrant workers and even for the lower income groups. Even the rental is required for all socioeconomic categories. And so we need to have those affordable rental housing models, so and the issues related, what delivery model will work, whether we have kind of the affordable finance. So the government scheme of affordable rental housing complex, and along with that there is this model tenancy act. So these will help obviously to promote the rental housing market in our country, obviously. And but obviously we need to do something more to promote the rental housing market. And in this context, I agree with Mr. Pavan when he asked about what will be the kind of role of the private, corporate sector to invest in the rental housing market, whether those will be affordable as well as financially viable, so otherwise nobody will invest in the rental housing market. But given this ARSC models and the Model Tenancy Act, obviously the step has already been taken, and obviously it will go a long way in helping popularizing the rental models in our country. And we have been working in different models for different socioeconomic groups to make it affordable, not only for the public sector agencies, but also the private sector agencies with or without subsidy. So that is another issue. So the last issue I wanted to point out is the capacity building aspect. So lack of skilled manpower is one of the key challenges for the development of the housing market. And along with that, most of the public agencies, state public agencies, and the urban local bodies are also in very bad shape, and there is no capacity building for initiating partnership projects on affordable housing. So we are talking about the partnership with the private sector, but there has to be some capacity at the local level to take it forward. So these are my observations for the time being, but I see the future for the housing sector is very bright, and which will definitely help in carrying forward the economy to its goal of 5 trillion by 2025. So thank you, President sir.
Thank you. Thanks a lot, Dr. Sen, for those good remarks and highlighting so many issues. And also thanks to Mr. Pavan Dixit for sharing his experience of the conditions that are witnessed in the southern parts of the country and the points about rental housing market. Before we open it up for discussion, I would like to ask the speaker, Mr. Thakur, about anything which he wishes to respond to the two discussants, if he has some points to make.
Thank you, Dr. So, I think Mr. Pavan raised very pertinent questions regarding the rental yield, which has been, on the lower side. But before that, let me give a context. For long, I would say that the housing sector has kind of, I would say, housing as a product has been sold, I think I would say rather oversold as an investment product. I keep on drawing a parallel with insurance. Insurance is meant to, cover your risk. But in India, unfortunately, it has been kind of always sold as an investment product. And if we look at the demographic profile of our country and the vast housing need that we have, I would say the housing rental would kind of remain in check, because we are going to see huge supply of houses coming in. See, the reason I say this, that as and when we open various land parcels, the huge supply would come in. So that means the rentals would always face some downward pressure. The reason you would see a huge spike, or let's say high rentals, you would see those are prevalent in highly developed localities, or let's say localities which are very near to your workplace. Now, for example, I live in Mumbai. My office is in 1 BKC. If I want to rent a house somewhere near that, the rental will be too high, and not necessarily that rental corresponds to a better living standard. Rather than, I can afford a bigger house in Navi Mumbai or Thane, at a lower rental. So in my opinion, a kind of, low rental yield would prevail in the Indian market right now. But you will see some kind of rental yield. If you look at particular locality, they are quite high, and there are few cities. For example, Hyderabad has better rental yield because the capital value of the houses have been always under check. We never saw huge inflation, unlike what we saw in Mumbai, or let's say some pockets of Bangalore. But again, the importance of renting will always be there, because as we speak, the increase of millennials, the increase of mobility, and not everybody would like to tie down themselves with a huge liability in terms of home loan, or restricting them to one location, because this millennials have this trend of kind of experimenting various jobs, various boundaries, and that's where the preference towards rental would be there. And the rental gives you a lot of flexibility. So no doubt, people are preferring to buy, but still there will be a larger portion who would still prefer to rent. Or let's say, if you look at, the other formats coming in, for example, shared accommodation, for example, the residential will not be only consumed in terms of buying. It will be, you see co-living, then there's this college accommodation, which is now moving towards more organized, which will see some kind of yield improvement. So yes, to answer your question, the importance of renting will always be there, but I see, the rental yields to be at a lower single digit for quite long time in India.
Thank you, Mr. Prashant.
Thank you, Pavan.
Thank you, Mr. Thakur, for your responses. Would any participant like to ask a question?
Yes, sir. I have few questions.
Okay.
Yes. So one of my, the initial question to Prashant sir would be, how do you see the growth of real estate sector going forward as a share of GDP? As you mentioned, the 7% figure is really outdated figure in my assessment, and China has 30%. Other economies also you showed. How do you see the future of real estate in terms of gaining the share over the period of time in next 5, 10, 15 years? Please unmute.
Yeah. As I said that if India has to reach a 5 trillion economy by 2025, apart from other sectors, the most important sector to fire up would be construction sector. And residential is 80% of the entire commercial sector when I talk about in terms of commercial offices, retail, and residential. So as of now, I think it would be in the range of 7 to 8%. And if I look at the current investment that is coming into this sector, I would say not residential to be alone, but the entire real estate sector, which comprises of commercial offices and retails as well, would contribute to close to 13 to 15% in the next 5 years. That's where the maths for 5 trillion economy would work. And this is the sector which has a quick multiplier effect. That if you put in $1, it would kind of have a multiplier effect in other sectors also.
Right.
Can I Arjun supplement to what Prashant said?
Please.
So as per one study by SDFC, so that 7% or 8% growth present contribution of housing
Dr. Sen, we are unable to hear you. You may like to switch off your video.
Okay, we'll see if sir can rejoin. I think sir has dropped out.
Okay. You had one more question, Dr. Arjun?
Sir, I have series of questions. Should I ask most of them at one go?
You can ask one.
Akshaya sir is back. Sir, please go ahead.
Did you hear me what I said?
No, sir.
Oh,
HDFC we heard. Huh.
Yeah, so that's what. So by 22, if it can increase from 8% to 22% by 2030, and it would be an excellent kind of step. Maybe housing would be contributing heavily towards the development of the country. And easily. Yeah.
Right. And that brings me to my another question to Mr. Prashant. If we are talking of around, let us say 8% now, it would be around, 15 lakh crore, 20 lakh crore. And then we are saying, 20% of 5 trillion, it will be almost, 1 crore kind of rupees. So it's kind of 5 times we are thinking. How do you see the role of private sector going ahead? Because we have seen the role of REITs and many other financial instruments also we were thinking, but kind of it is also getting delayed, and the role of foreign direct investments in our real estate industry. So please unmute, Prashant. So please unmute. Yeah.
See, Dr. Arjun, if you look at why the investment were kind of drying up, why the foreign funds were reluctant to come to India. Uh, once, I was in office of a foreign fund house abroad, and it was written India. So, and he said that, why it is written India? It says, it reminds me of one thing that I will always keep in my mind, that said, I will never do it in India, because he had burnt a lot of money. If you'd see, all the developers made money, the only person to lose money were the investors, foreign portfolio investor, foreign institutional investors. But if you look at how things have changed post RERA, and how the grade C, grade D, and all those bad apples, I would say, have been weeded out of the system post GST and demonetization coming in. There's a lot of transparency that has come in, and that's why you are starting to see a lot of global funds getting interested in India again. And it's not only the residential sector that is going to propel this growth. It will also be the commercial sector. A lot of people have been saying that this work from home, or let's say hybrid model, will have a negative impact on the Indian commercial sector. But I would also like to differ. It will take a temporary hit, no doubt. But if you look at the cost benefit advantage that India provides, I'll give you a small example. The same work, if a US based company get it done in tier 2 or tier 3 city of US, we can get it done 81% cheaper over here in a center like Bangalore, Pune, and Hyderabad. And the rentals, if you take into dollars term for them, it has always been the same. In fact, with the way the rupee has been appreciating, the rental for them has been on a downward spiral. And if you look at the rentals, commercial rentals for cities like Hyderabad, Bangalore, and you compare it with the cities like Hong Kong, Singapore, and London, we are still providing an average of sub-dollar rentals to them. And look at the talent pool that we have. So the demand for outsourcing, or let's say having the global shared center, will always be there in India. The de-densification that we're talking about in the commercial spaces. Now, offices will exist in a different format, but we would have noticed that the spaces for per cubicle had come down. It came down to 70, 75 square feet per person. Now it's slowly going up by 125. And then, so it will be there. So that's the reason a lot of investment is coming in commercial sector. Retail, though it is kind of going through its severe pain. By retail, I mean retail malls in terms of real estate. A lot of investment is coming in there also, because India is basically consumption-driven economy. We don't have any social places like the West, like museum or park where people go out and spend. Just see, the places where the lockdown has been lifted, malls have been operational. Look at the crowd. So the inherent demand is there. I would say the demand, there are two types of demand. One is demand lost and one is demand deferred. So the real estate demand, I would say, is kind of more of a deferred demand. So the huge amount of investment that is going to come in, and there's been a blessing in disguise. If you look at the Chinese real estate, the kind of prices they're going, you look at Evergrande and the sector. So a lot of money that was being allocated for emerging fund, and in which China, kind of, I would say, attracted the lion's share, will now flow to India. So that's where this cycle is going to kind of enter into a multi-growth year, I would say. And that's where the GDP contribution, by this I don't only mean to say residential, the entire real estate construction would significantly increase.
Right. That brings me to another set of queries, which I thought to learn from you, sir. We have seen that India has moved drastically in ease of doing business, some indices, but when we see the ease of construction or to the rankings pertaining to real estate, it has not moved very far. And despite having RERA, do you think the industry really needs, because many of the developers are now, complaining that vacant houses and so many of compliances also you have to do. So do you think RERA as some body needs to, our market needs to be more regulated in the long term, and the levers which we are using, such as stamp duty, circle rate, something more needs to done from the government part, and also especially to the middle income class, because PMAY has this component of CLSS. Some movement was there because of that. Do you think now is the time when government also moves towards affordable sector for middle class? Will that help the industry?
I think, this is the core of the problem for the sector, that, we have, a developer has to go through almost, 150 approvals before he can launch a project. And then the time taken can be, from 1 year to 2 years. And if you, account for the cost of land plus the approval cost, it constitutes almost 80% of the entire project of the developer, while the construction cost is, same across the cities. So if you really want to bring down the final price of a house, we have to, somehow bring down the cost of the land, and we have to expedite the regulation process, because the longer the developer takes the time for getting approvals, there are chances of cost overrun, the product getting outdated. So, the way we have RERA, we should also look for having a single clearance window. But unfortunately, in India, land is the subject of state, and each and every state has its different law and different structure of tax in terms of stamp duty and registration charges. So that's where the real problem is. And if you see the way RERA was also implemented, it was diluted in many of the states. But again, it's kind of having something better than nothing. So I think this has been a long-standing demand of the developers, that if we really want to bring in transparency, if we really want to bring down the overall cost of a house for the end user, we also need some accountability from the government side, especially the authorities that provide approvals. They have been demanding the way developers are brought under the purview of RERA. They have been also kind of demanding, or rather say suggesting right now, that these approving authorities should also be brought under RERA, so that there is some kind of time-bound accountability on their side. But again, these things are still under discussion, and that's where a lot of private developers are still very reluctant in taking a full-fledged dip in affordable projects.
Yes, in fact, that was my next question, that we have, slum upgradation and so many of things. Government is keep on adding new incentives for the private player, and EWS and LIG is such a huge market as the demand we have, especially as we are urbanizing more and more. Why do you see there is so much of reluctancy from the private sector, be it in affordable housing, social housing, and also we have something now called GHTS, Global Housing Technology Competition. Many of other countries are coming, but not the private players coming in terms of technology, especially for delivery of, let us say, luxury or affordable or social projects in India. What is lacking in that regard? And I will also add my last question in that since we are also talking of having a lot of liquidity and good outlay for the housing industry per se, as we move ahead, do you see the inflation or the price rise part also coming up, especially on behalf of the supplies from cement, steel, and other cost overruns? How do you see whether that phenomena happening, and how to check that so that things remain stable?
Sure. To answer your first question, I think this is still a very debatable topic, or I would say rather problem. If you look at city like Mumbai, which is plagued by lot of buildings which are not livable, to be very honest, but still a lot of redevelopment project has been stuck, and none of the developers are very keen on taking it up, in spite of government announcing a lot of incentives. In fact, recently the government announced 50% reduction in premium as well. The only problem is the hassles of getting approval. Just imagine if you launch a new project, there is already a huge problem of getting approvals. When you get involved in a redevelopment, there's a huge amount of existing tenants who needs to be rehabilitated before they get the project handed over. Then there is a huge problem of ownership. because still, it's very difficult to find out who is tenant, who is landlord from the track record or the paperwork, because these projects are very old projects where the tenants have been living for generation to generation, most of them in Pagadi system. So I think that it's the sheer problem of getting approvals and the time that goes into it. And then, the weak financial position of the developers also, I would say, is discouraging them. So until unless the government steps in and takes the responsibility of expediting the approvals, getting all the clearances and handing over a very clean project to the developers, the private developers will be very reluctant to take these redevelopment projects. But let me give you, make it one thing very clear, that these redevelopment projects are in the prime locations of Mumbai and which are highly lucrative. It's not that the developers do not want to enter, they want to enter, but the challenges, which is more of a regulatory and for which I would say the ball is in the government's court, is kind of discouraging them to come in a full-fledged manner.
Right. In fact, viability gap fund and so many things also coming, but we are losing, especially our real estate industry look dull that ways. China is doing something called state-led gentrification for cleaning their inner areas, but we don't. But thank you very much. That will be all. Rumi sir, we can go to way forward round if you suggest.
Yeah, certainly.
Yeah.
I think you asked many relevant points, and it was a nice response, very useful response by the distinguished speaker. From the sense that I get after listening to the three speakers, Mr. Thakur, Dr. Sen, Mr. Dixit, I realize, and we all know about this, is that while it is necessary that regulations are in place for allowing the operators to work in a better manner, and because what we are looking for and everybody is looking for is better looking developments around us, aesthetically nice. The violations need to be controlled. From what I understand is that the guidelines or the practices that exist for the operation of the real estate sector are to some extent coming in the way of their optimal performance. They would be able to perform better if some of these rules and regulations are simplified so that it is convenient for the real estate sector players to operate and give in their best. So some kind of a single window system that Mr. Thakur mentioned, and simplification of other guidelines like taking approvals is an important task that needs to be attended to. The second point that is also important for a country like India, where a large proportion of the population lives below the poverty line in cities, and the affordability factor comes in the way of they renting or having their own property, is something for the real estate sector to think about in terms of reservation of spaces for the low-income categories and economically weaker sections. Very often we hear about government coming out with laws and rules about reservation of land within new development or greenfield development, but it so happens that we also hear about this in the schooling system. For example, just to take you away from the subject, that reservation of seats for persons from low-income families. But similarly, the government has made reservations in new housing projects, new developments. But unfortunately, in some cases, this does not really happen. And the places that are earmarked for the housing the low income categories is given to some other persons. So this issue needs to be addressed by people of eminence such as Mr. Thakur, who worked with Mr. Dixit, who worked with reputed organizations to ensure that they are playing they're making an important contribution insofar addressing the social issues prevalent in the country. I think it was a wonderful presentation by Mr. Thakur, and the discussants were equally good insofar as the responses were concerned. It generated a lot of interest personally within me and also all those who are attending the discussion. And I would like to once again, on behalf of IMPRI, thank Mr. Thakur, Mr. Dixit, and Dr. Sen for their taking out time to share their experiences in making this program interesting and a big success. With these concluding remarks, I would like to hand over the platform to the main organizer of today's program, Dr. Arjun Kumar.
Thank you. Thank you so much, Rumi sir, for summarizing and also leading this deliberation. So let me formally propose a vote of thanks for this very interesting session today. On behalf of IMPRI Center for Habitat, Urban and Regional Studies at IMPRI, thank you for joining us today on our series, The State of Cities, #City Conversation. And today on the special lecture on the housing market amidst the COVID-19 pandemic by Prashant Thakur sir. Thank you very much, sir, for accepting our invitation and giving such an interesting insight about the housing market, especially by so much of insightful research. Thank you very much, Rumi sir, for chairing the session as always, and Akshaya sir and Pavan sir, thank you so much for your support as always, and to also participating in this discussion at this time of the pandemic, so that we keep connected on this very important issue and keep learning from it. Thank you very much for those all who attended here or on Facebook Live, or later see it on our recordings on YouTube and listen to our podcast. Thank you once again, and we hope that you do tune into our future episodes of Web Policy Talk. Thank you and have a nice evening. Thank you very much.
Thank you. Thank you, Arjun.
Thank you. Thanks, everyone.
Very nice
Thanks,
presentation.
Mr. Prashant. Thanks, Mr. Arjun.
Very